Hello and good morning, everyone. Welcome to Almus Market Mornings, your daily dose of financial updates with me, Swaraj. And today I have with me Mr. Nikunj Bharakhda, who will be taking us through the technical setups he's seeing in the markets. Before that, let's go through the latest developments. Now, it was a positive day for risk sentiment ahead of US payrolls tonight on lack of fresh triggers. Equities were up with the S&P 500 being up by 1.8%. The dollar USD, which is the dollar index, on the other hand, was down by 0.7%. Commodity prices were also generally higher. Yields, in contrast, were broadly steady, with the US 10-year rising by zero point 0.2 basis to 2.91%. Talking about Fed Vice Chair Bernard stating it's very hard to see the case for a pause. Now, it's very important on the background of expectations that Fed might pause after September, as indicated by other Fed members. That comment, however, didn't seem to weigh too heavily on the markets, but certainly plays against the notion of a near-term pause. On the other hand, Fed member Muster's comment that if by the September FOMC meeting, the monthly readings on inflation provide compelling evidence that inflation is moving down, then the pace of rate increases could slow. Dollar's corrective move lower has sustained, though bulls tried to regain a foothold. Euro's ability to bounce off the support at 1.0650, which was also the previous resistance, is encouraging for dollar bears. This, combined with some in the market believing in a pause by the Fed after July hike, is supporting further retracement for the dollar, but definitely not indicating a broader shift in the trend so far. Of course, the payroll numbers tonight will have a say in the further trend in stocks and currency. The leading indicator pointing to a slight below expectations reading in this month's NFP report, with headline job growth potentially coming in somewhere in the 225 to 325 range, with average earnings likely rising by 0.4%. For the rupee, it is still a mixed picture. RBI holds the cards for the next direction, particularly if the factors weighing on it intensifies, but downside is equally held strongly by the oil companies on bids. For any meaningful improvement in the rupee value, we need oil prices to correct substantially and reversal in the FII flows. Now, speaking of rupee, Nikunj, what are you seeing in the charts of dollar index and the rupee?
Yeah, so good morning, everyone. Welcome to the x-axis and y-axis of technical analysis financial markets. I would like to go through first dollar index. Dollar index, we have seen the high of recent high of 105, and right now it is quoting at 101.70. So as far as 105 is concerned, we believe that we have seen the recent high and possibly will now moving towards 101.30 and possibly towards 100. 100 being the psychological level. If at all it closes below that, then possibly we'll see that we will have more downside to come. But the first support point, which is very strong, is at 101.30. So looking at dollar index, we have seen many major currencies against our dollar has appreciated because dollar index has fallen. So we believe that even it will have some impact on dollar rupee, because when dollar index was rising, it was not having that impact on dollar rupee. So when it is breaking down, will not have much impact, but at the same time will have some proportion of it reflecting in dollar rupee. We believe that 77.70, 77.80 is a strong resistance point. As far as it is not breaking, possibly we'll see 77 figures, 76.80 levels. So for exports, if at all we get 77.60 levels, that's a better level to hedge. At least 60 to 70% exports can be hedged at this level. And on the lower side for importers, 76.80 and 77 figure are good levels for near-term imports. So this was dollar index and dollar rupee. Now coming to majors, Euro USD right now at 1.0755. 2 days before, like since last 2 days, we have seen a good dip around 1.0650 levels, but again yesterday it has bounced. So today being Friday, the weekly close, if at all euro dollar is closing near 1.0650, then possibly we'll have some more downside. Otherwise, we'll see again a move towards 1.08, 1.0830 levels. Now coming to pound, GBP USD right now at 1.2575. 2460 is a very good support in GBP, and on the higher side, 2675, 2680 is a good level to go for exports. So these were currencies, majors, dollar rupee index, and yeah, that's it, Swaraj.
Okay, thank you, Nikunj. That was crisp as usual. And we, of course, have the payroll numbers tonight, which might give further direction to the currencies. And as Nikunj mentioned, 77.70, 77.80 is a very strong resistance. And for euro dollar, 1.0650 weekly close can lead to a further downside. That's it from our end. We'll see you all next week. Have a very good weekend. Bye bye.